On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope you're all well. Let's take a look back at last week, then let's refocus on what we need to keep an eye on in the week ahead. Global share markets had a strong week. The S&P 500 in the US was up 0.6%, it hit new highs through the week. UK shares gained 1.1%, Europe was up 3%, Japan was up 3.7%. But the star of the show was emerging market equities, which rallied 6.2% last week. They were buoyed by Chinese stimulus measures that saw the Shanghai Composite Index in China surge 12.8%. That was its best weekly gain since 2008. Aussie shares were flat, although they did reach new highs during the week, but they were only up ever so slightly. They may as well be flat. It was a very marginal gain, but new highs are new highs, aren't they? And the local NZX 50 did buck the trend and slip back a little bit. It was down 0.2%, which was the second down week in a row for the local market. However, it's still on track for its third consecutive monthly rise, and it's on track for the best quarterly gain since 2020. The NZX 50 is up 6.3% during the September quarter with one trading session to go, which is the best gain that we've seen since the final quarter, I think, of the 2020 calendar year. So it hasn't been a bad performance at all for our market. Interest rates little moved in the US, and here in New Zealand there wasn't a lot of movement either. The 2-year swap rate was down 9 basis points, ended at 3.6%, the lowest since May 2022. The 5-year swap rate was little moved, it ended about 3.5%. Looking back at some of the key releases, and I was very interested in flash PMIs for September, which were out early last week. PMI stands for Purchasing Managers Index. These are essentially activity indicators. And for the month of September, they were a little bit mixed. We saw some solid measures come out in some regions, but there were a couple where we saw a bit of a softening, quite a noticeable softening. So on the positive side of the ledger, the US, the UK and Japan remained very solid. We saw PMIs of 54.4, 52.9, 52.5, all of those in line with what you've seen in recent months and still comfortably above that break-even 50 level, which separates expansion from contraction. However, in Australia and in Europe, we saw PMIs fall below 50. Both of those regions hit 8-month lows. So it is a bit of a mixed bag. And I guess also on the slightly negative side, when you're looking at the US, which has been the beacon of strength in recent months, the US PMI does imply that the economy is growing at a solid pace, but the manufacturing sector still remains very weak. And you're starting to see political uncertainty become a bit of a headwind. So it wasn't completely good across the board. Also, a few early signs of a reacceleration in inflation. So that's something that the Fed needs to keep one eye on. It can't completely shift its focus to the labour market. But speaking of US inflation, we did get some good news on that front too. We had the PCE inflation index. This is the Fed's preferred inflation gauge. And for August, we saw the headline PCE rise 0.1% for the month and the core PCE rise 0.2%. So looking at the annual inflation rates, headline PCE inflation slowed a little more than expected. It came down to 2.2%, which is actually the lowest we've seen in more than 3.5 years. A month before this, it was 2.5, so 2.2, very good news for the Federal Reserve. Core PCE inflation, not quite as good. It actually increased a little bit, came up to 2.7%, so still in the twos, not terrible, but it did rise slightly. That was in line with market forecasts though, so there wasn't a huge market reaction. In terms of the week of central bank moves, the most prevalent meeting came across the Tasman for the Reserve Bank of Australia. It had a monetary policy meeting. it didn't do anything. It left the cash rate unchanged at 4.35%. That is the highest since 2011, and it's been at that level since November last year. The commentary was a little bit hawkish. The RBA did note that while headline inflation had come down, and in the monthly indicator, which came out a day later, we actually saw the inflation rate fall to 2.7%. It did point out that that was largely, or in the big way, due to federal and state cost of living relief, things like electricity price rebates. Those sorts of things have temporarily brought inflation down. The Reserve Bank of Australia is still quite worried about underlying inflation, which it still believes is too high. And when you look at the quarterly inflation measures that the RBA focuses on, they're still tracking at about 3.9%. So financial markets don't see the RBA cutting interest rates until December at the earliest, or possibly sometime in early 2025. So they're on a bit of a different path than we are in New Zealand or the Federal Reserve is in the US. They're still a bit worried about inflation, and they're going to be later to cutting interest rates than some of those other central banks around the world. Right, looking ahead to the coming week, and there will be a lot to focus on in the US. The labour market will be in focus, and that's really important because it's been a weakening labour market that caused the Federal Reserve to push through that bigger than expected 50 basis point cut to interest rates. So it will be very interesting to look at the jobs report, which we will get this Friday in the US. So that will come out on Saturday here in New Zealand. And we'll also get the latest ISM indices on Tuesday and Thursday. So looking at the jobs report first, this will absolutely be the highlight. If we think back to a month ago, it was a little bit soft. Job creation was below forecast, and we saw downward revisions to the previous 2 months. So that was something that did fuel that desire for the Fed to get ahead of any slowdown. The unemployment rate in the US is sitting at 4.2%. The underemployment rate, which is a broader measure of labour market slack, that is sitting at 7.9%. That's the highest since October 2021. So we'll be watching those things, and we'll be watching how many new jobs are created. Markets are expecting unemployment to remain unchanged at 4.2. They're expecting about 140, 150,000 new jobs. But if these figures come in weaker than expected, that could see investors price in another 50 basis point rate cut in November. At the moment, they're sort of on the fence between whether it'll be a 25 or another 50. And I think the labour market will be one of the key things to watch. So that's probably the highlight of the week, and we will get that on Friday in the US, Saturday here in New Zealand. Before that jobs report, we will get the ISM indices. ISM stands for Institute of Supply Management, and that organisation will release its manufacturing index on Tuesday and the services index on Thursday. So these are economic indicators. They're essentially PMIs, survey-based, give you a good read on how the manufacturing sector is doing and how the services sector is doing. So these will add to, there'll be additional pieces of the puzzle too. Manufacturing has been very weak in recent times in the US, but services has been quite strong. So we'll be watching how they are looking for the month of September as well. Elsewhere, still thinking about what's happening out there in the world, there are a couple of central bank speakers to keep an eye on. Federal Reserve Chair Jerome Powell speaking on Monday in Nashville. Actually, it's the annual meeting of the National Association for Business Economics. So he's talking on the economic outlook on Monday in Nashville. And on that same day, in Brussels, across the Atlantic, we will get a speech from ECB, European Central Bank President Christine Lagarde. So Monday, a big day for central bank speakers. On the political front, there's also another debate to keep an eye on. This time it will be with the US vice presidential candidates. This will be in New York, and it'll be the only one we see between Democrat Tim Walz and Republican J.D. Vance. So about a month to go until the US election. Kamala Harris is obviously in the lead, but not by a whole lot, so things could still change. This debate takes place on Tuesday evening in the US, so it will air at, I think, 2 o'clock New Zealand time on Wednesday, so that is worth watching as well. In China, which has obviously been in focus after those stimulus measures were announced last week, and the share market had a very, very good week. We will get the latest PMIs for September. They're out on Monday afternoon, so we'll get the official government PMIs. We'll also get some private sector measures. They will give us a bit of a read on how the Chinese economy, the second biggest in the world, one of New Zealand's biggest trading partners, is tracking. And also in China, Tuesday will mark the beginning of China's Golden Week, which runs all the way through to October 7th, and markets will be closed in China throughout that period. On the local front, business confidence will be very much in focus. We will get the September edition of the ANZ Business Outlook on Monday at 1 p.m. And hot on its heels will be the quarterly survey of business opinion, the QSBO, from the NZIER, the New Zealand Institute of Economic Research. Now, the ANZ survey comes out every month, so we've seen it more recently and it's rebounded very strongly. The headline confidence measure is sitting at the highest level since 2014. Own activity is sitting at the highest level since 2017. So we've seen a nice bounce as mortgage rates have come down and as businesses have seen light at the end of the tunnel. Probably not right on our doorstep, but looking ahead to 2025, I think businesses are feeling a little bit better. So whether that goes up anymore, I'm not sure. It's already risen quite strongly, so it might sort of stabilize, or even it might dip a little bit from those very strong levels. But I would expect the QSBO to look a lot better this quarter, because we haven't seen one of these for 3 months, and things have improved over the last 3 months in terms of the outlook. The economy is still in recession, but the outlook has improved because we've started to see the OCR come down and we've seen a string of mortgage rate cuts. So business confidence very much in focus here in NZ. 1 p.m. ANZ survey, and then on Tuesday morning at 10 o'clock you get the QSBO. We will also get the results of another dairy auction early on Wednesday morning. The latest global dairy trade index is out. A fortnight ago, this edged higher, so the dairy sector going okay. Prices are up about 12% so far this year, sitting near 2-year highs. And that was another reason why last week Fonterra increased its milk price forecast again for the 2024-2025 season. So it increased it by 50 cents, which is about 5 or 6%. It's now sitting at $9, which would make for the second biggest payout in history. The only bigger one we've seen is 3 years ago when we saw a $9.30 payout. That was in the 2021-2022 season. So I know costs have gone up for the dairy sector, and that means that $9 isn't what it used to be 3 years, 5 years ago, but still very good to see us in the nines in terms of Fonterra's midpoint. Not a lot coming on the corporate calendar. There is a Synlait result on Monday. That's the only thing to really keep an eye on here in New Zealand. Internationally, couple of results. The biggest and most interesting one to me will be the Nike result, which is out on Tuesday in the US, so it will be released on Wednesday here in New Zealand. So that's how the week is shaping up. The only thing I didn't touch on that I thought I should was currencies. We've seen the Kiwi dollar keep pushing higher, so it was up again last week, very strong against the US dollar. I won't delve too deep into that because I am planning on writing something and recording an episode on the New Zealand dollar and what it's doing, why it's been strong, where it might go from here. I'll do that over the next few days, so rather than talk about it now, I'll leave you hanging. You can keep an eye out for that episode. Final piece of housekeeping. I won't be releasing an episode like this in a week's time. It's school holidays, so I'll take a bit of time off and I'll be away with the family. So thanks for listening. And if you are doing the same as I am and taking a bit of time out, heading away for the kids or staying put with the kids and the family, enjoy that time and we will talk again soon.
For more insights, visit craigsip.com.